And then we had another wild and woolly Wednesday. MBS are up 19 points in the morning, winning back some of the Powell ground lost yesterday. Although ADP numbers came in at 8:15 a.m., the bonds improved shortly thereafter. It was actually the simple tolling of the bell that marking the open of the CME precipitated a rally of several basis points in the bond market. Swap traders are priced in a full percentage points of Fed hikes over the next 4 meetings. We got ADP employment, which came in at 242,000, way higher than the 200,000 expected, and way higher than the 119,000 previously. The bad news for the bond market is that the annual pay increased 7.2%, so people are going to have more money to spend on stuff, making inflation even higher. Jobs are holding strong, giving more ammo to keep raising rates, as they keep saying, and nobody wants to believe. The U.S. trade deficit grew to the widest in 3 months at the start of the year, reflecting a pickup in imports of merchandise. The trade gap in goods and services increased 1.6% to $68.3 billion in January from a month earlier. Commerce Department data showed on Wednesday figures aren't adjusted for inflation, so keep that in mind. This puts a lot of weight on the Consumer Price Index, which is coming next Tuesday. The reaction in the bond market was muted on the long end. The 10-year didn't do much, but we saw that the 2-year yield increased by 22 basis points to 5.09%. Wow, that's high for a 2-year yield. The 2 to 10 spread hit a negative 103 basis points, which is the most inverted yield curve since before the 81-82 recession, which was a real doozy. I always like to remind people that killing inflation and the recession that ensued took about 4.5 years. The Fed Fund futures now see a 50 basis point hike in the March meeting. I hope they do it and they get it over with. Hell, bring it a point. I don't care. For sale inventory declined in January according to the Black Knight Mortgage Monitor. The company reported that home prices fell 0.13% month over month on a seasonally adjusted basis. It's the smallest decline since it started about 7 months ago. Half of all mortgages are at rates of 3.5 or lower, while 2/3 are below 4. Congress is looking into a tax credit to incentivize builders to renovate homes in blighted areas. That's kind of interesting. In many areas, the cost to renovate is more than the price of the property could fetch on the market, so nothing happens. At the middle of the day, we had a 10-year Treasury auction. They came in at 3.985 on 3.96 expectations. Bid to cover was 2.35x versus a 2.38x average. This is moderately to significantly weaker depending on whether you include the past 2 hours of selling as some sort of a pre-auction concession. Either way, bonds moved quickly to the worst levels of the day, ending up at 99.17, which was down 14 basis points on the day. S&P was up 5 points, and the 10-year Treasury was up 2 basis points. At 99.17, that puts us just below that S1 line right there. So it looked like we tested 2 different lines on the day before ending up right at the middle one. And we have 2 floors and about a dozen ceilings. The Federal Trade Commission is set to sue to block the merger of Black Knight and Intercontinental Exchange. The 2 companies would need to divest some either Encompass or Empower assets as part of the merger, which they have now, since I posted this, agreed to do. They are selling that off. They're selling off their Empower software program to Constellation Systems out of Canada. We also got news that California's CMG Mortgage, $19 billion in 2022, announced the asset acquisition of the retail division of Homebridge Financial Services, based out of New Jersey, which originated $12 billion the same year. Over the last 30 years, Homebridge has grown to one of the largest privately held non-bank lenders in the United States. And if you remember right, they were supposed to sell to Figure Technologies last year before heavily based in crypto tanked pretty hard, so that did not happen. Also, Homebridge does own the wholesale divisions of Homebridge Wholesale and Remen Wholesale. Homebridge will retain its wholesale divisions.